Dow dropping a stunning 876 points yesterday. The NASDAQ losing almost 5% of its value, Allison, in a single day.
Yeah, not good at all. Let's bring in business and markets analyst and Newsmax contributor Seth Denson. Seth, good morning to you.
Hey, good morning, y'all.
Seth, great to have you on. Not a great day on Wall Street to start the new week yesterday. We're now officially in bear market territory. Explain what that means.
Well, bear market is effectively when the market drops 20% over a period of time, an extended period of time. So effectively, that's where we're at. We hear a lot of times bull market and bear market, right? Well, it's just the opposite. Bull market's when it rises 20%, bear market's when it falls 20%. We lived through recently one of the longest bull markets in history, right? From 2009 to 2019. We saw it really rise exponentially under the Trump administration. But unfortunately, it's got to go down. Now, I will tell you, and I will encourage people, right? I studied under what I would consider to be a world-renowned investor early on in my career. And I said, man, in bull markets, don't you love making money? And he made the comment to me, he said, no. He goes, I earn the money right now. I make it in a bear market. So there's opportunity. You hear us say all the time, buy low, sell high.
I like that. Glass half full.
Some positivity this morning.
Right.
Seth, we're hearing that the Fed may raise interest rates. How much, and is that going to make a difference at all? Because we keep hearing about recession potentially in the first quarter of 2023.
Yeah, I would expect that the Fed perhaps raises interest rates 3/4 of a basis point, so 75 basis points. Even some economists are calling for a full point. The reality is that the Fed really wants to get this under control. They needed to have started this a long time ago. We would need 3% increases to get it at this point under control at the level they want. This is no longer a singular solution thing like raising interest rates. The critical component to all of this is energy prices. I will tell you, bar none, energy prices will have a much bigger impact on inflation at this point than raising interest rates. That being said, the Fed doesn't control energy prices, although it can influence it, and certainly the administration can, but the Fed can't. The Fed controls monetary policy, and unfortunately, they waited way too long to get out of the gate, and so they're going to be raising it 3/4 of an interest point. Now, again, real quick, I think it's really important to put things into perspective. If we look at the average interest rate, Fed fund rate, over the last 50 years, it's averaged around 5%. So if the Fed does raise this 3/4%, we're looking at about 1.5%. We have, as Americans, have gotten way too addicted to cheap money for a long, long time. And we're nowhere near the average of where money has been over the last 50 years.
Yeah. All right. Seth Denson, we'll see you in just a little bit. Thanks for the update there. Not a good start to the week for the Dow, NASDAQ, and S&P 500. Seth Denson, thank you so much.
Thanks, Allison. Now we're going to take a quick look at today's business headlines. And for a little help with that, we're going to bring in business and markets analyst and Newsmax contributor Seth Denson. Good morning, Seth.
Hey, good morning, Alex. Good to see you.
Good to see you. All right, a tough start to the week with the markets dropping nearly 900 points. This morning, futures are up significantly. Now, yesterday was very tough for investors, and now there's word the Fed will actually raise interest rates by 3/4 of a point this week. So, Seth, what could this do to the already volatile market?
Well, I think, listen, I think long term, as the Fed continues to raise interest rates, that tends to have the market continue to decline. It's squeezing monetary policy. It's pulling money out of the market. Short term, it could give it a little bit of a boost, a buying opportunity, I think. We certainly saw that last time the Fed raised rates. The market gave it a day or two little boost. But long term, I think that the market has not hit the bottom. I don't time markets, but at the same time, I'm watching them. And I don't think we're there yet.
Okay. Well, things weren't just bad for S&P yesterday. Bitcoin actually hit its lowest level since December of 2020. That is, cryptocurrencies had one of their worst days ever. And then you also have shares of General Motors. They closed below the company's IPO price for the first time since October of 2020. What does this mean for one of America's biggest automakers?
Well, yeah, I think for GM, it tightened the belts. I mean, GM hit a high point during the middle of the pandemic as the supply chain challenges caused people to really want to buy cars. They didn't have to do a lot of incentives. They weren't making a lot of cars, but yet they were making massive profits on them. And I think the reality is set in. GM stock, though, is one of those that remains relatively stable in that 30 to 40 range consistently if you look at the history of the stock. So I'm not overly concerned about GM. I don't think they're going under. They're making a big push into EV. That's going to take some time and it's going to take some money to invest. But I think that, listen, the government has made it very clear they're never going to let GM fail. So to an investor that wants to put their money somewhere, it's not a bad place, but don't expect it to do much there either.
Okay, well, I want to stick with cars. And speaking of EV, Elon Musk, he warned he may be doing it, and he did. Cutting Tesla's workforce by 10%. Among those losing their jobs actually was the country manager in Singapore. This as Musk sent out a company-wide email warning Tesla had, quote, very tough quarter. Seth, should investors be worried?
You know, I think in the short term, I think investors are going to penalize Musk for this. If you look at where his stock is right now and what happened yesterday, it dropped significantly. I think long term, as an investor that's looking at long-term time horizons, I think Tesla could be a buy pretty quick if it's not there already. And that's because as an investor, I want someone at the helm that has good business sense and doesn't sit there and wait for things to happen, is making them happen. And while we never like to hear people lose their jobs, and certainly this person in Singapore that lost their jobs went very quickly to the airwaves on social media to air his grievances. But nonetheless, I think that you need leaders that say, hey, bad things are happening. We need to tighten the belts. If they're holding my money as an investor, I want them to have good business acumen and good business sense. And Elon Musk may be proving that right now. By the way, he's focusing on large salary jobs. These are the high-cost, salaried folks. He has not been focusing on those hourly workers that actually make the cars.
Okay, that's a really good point to make, Seth, actually. And Elon Musk certainly makes things happen. All right, let's switch gears completely. The largest pork processor in the United States says it's closing up shop in California in 2023. So what does this mean for the industry and consumers at the grocery store?
Well, listen, pork manufacturers, specifically meat packers, warned of this as, I think it was Proposition 12 that California passed. Regulatory environment, high cost of labor, taxes, all of that has really made it difficult to be a meat processor in the state of California. And so we're going to start seeing, I think, more of them closing up shop. It doesn't mean that we're going to see a reduction in pork supply. Matter of fact, Smithfield hasn't specifically stated whether or not they're going to shift resources to other areas of the country, but they're pulling out of California just because of the high cost. Inflation already where it is, pork was going to continue to rise, and Smithfield is looking for lower cost places, unlike or much like many other companies that are leaving the state of California.
Yeah, absolutely. Sticking with meat, Popeyes celebrating 50 years in the business with a special deal for customers. Seth, get this. 2-piece signature chicken for just 59 cents. Are you a Popeyes fan? What do you think about this?
No, I am a Popeyes fan. Unfortunately, Popeyes isn't as big a fan of me as I am of it. But nonetheless, I enjoy it, even though I don't enjoy the short term afterwards. That being said, Popeyes is great. 59 cents is a heck of a deal. And if you're looking for an inflationary hedge right now for your food, maybe this is it.
I got something to watch that Popeyes down for you. Jack Daniels and Coca-Cola announced on Monday they're officially mixing things up. Tell us about this.
Yeah, you listen. Okay, this is a bad move if you like Jack Daniels or if you like Coke. It's like I like peanut butter and I like jelly. I don't like it when they mix the two together. I want to do that. Man, when I was old enough, I liked Jack and Coke. Now I just get the Jack and hold the Coke. But that being said, this is going to give them a little bit of a marketing boost. People are going to try this, but I don't know that it lasts all that long. We'll just have to wait and see. But by the way, Jack Daniels and Popeyes, that is a winning combination.
I was about to say, not too bad. All right, Seth Denson, thank you so much for joining us. We'll see you again in the next hour.
Thanks, Alex.